Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I am glad you could be here with me. Now, there's a lot to talk about in the market. It turned sour today after kind of a flat day yesterday, and we'll talk about it. We'll look at the technical picture of the market, what we could expect from tomorrow, and yeah, we've got a quick take on SOFI and their earnings that came out in the after hours. We also have a deep dive on Zoom Video's earnings that came out yesterday, all in today's video. But remember, the most important thing is what's on your mind. So if you have a question, leave that ticker symbol and your question in the comments. We'll go over it live during the show. All right. First off, let's go through what happened in the market today. So Wall Street definitely ended the first trading day of March. I don't know if we want to call it like a lion because it fell or like a lamb because it fell. Your pick. Maybe like a lamb, meaning that March will go out like a lion. Remember that old phrase from kindergarten when we're learning about the different seasons? I don't know if you remember doing this or not, but if March comes in like a lamb, it'll go out like a lion, and vice versa. If it comes in like a lion, it'll go out like a lamb. So can we apply that to our market? We'll find out this year if that is true or not. But I'm going to call it a lamb because we just totally fell over and went straight down, right? Okay, today in the market, it was definitely a risk off session, which saw oil prices spike above $106 per barrel. Now, a historical fact, we have never ever seen oil above $100 a barrel without also seeing a recession thereafter. That's a historical fact. Okay. Can we buck that trend this time around? Honestly, it's not really looking like that. Also, treasury yields, they just went crazy. They dropped noticeably in response to worsening geopolitical tensions. The Dow Jones tumbled almost 700 points, and the S&P 500 and Nasdaq both declined 2% each. The market sentiment remains dominant by war headlines, with Russia troops bombing cities and enclosing the capital city of Kyiv. Now, on top of that, energy prices have skyrocketed since the Russian invasion began, adding to the headache for central banks trying to tame the highest inflation in decades. It's almost like we have a perfect storm approaching to just take down this market, right? Now, falls are the most pronounced in financial stocks today, which may be mostly impacted by the sanctions. Because remember, when you put sanctions on another country, it doesn't only hurt that other country. As a matter of fact, sometimes it doesn't even hurt the leaders of the country. It just hurts the people of the country who don't make any choices whatsoever about a country going to war. And then it also can hurt your own country. And we're seeing that today. American Express down over 8%. Bank of America, JP Morgan, Goldman Sachs, they all lost more than 3%. Now, 10 of the 11 S&P 500 sectors closed lower. Can you guess what the one sector was that closed higher today? Well, with the financial sector sinking 3.7%, they took the brunt of the damage. And then we had technology down 1.9%. It was definitely a heavy dragger on the market. Growth stocks and value stocks, it didn't matter. They both declined together. The energy sector, unsurprisingly, closed higher. But it was a little surprising to see just a 1% gain when oil prices settled higher by 8.3% to $103.41 per barrel. Now, the relative disconnect might have been owed to the view that the higher oil prices go, that will lead to decreased demand. Maybe, right? I mean, you still have to heat your home, whether it's $50 a barrel or $100 a barrel, right? All right. The Treasury market was a signpost for growth concerns, which I don't know. Maybe they were further beaten up by more US companies restricting their services in Russia. It could be. Now, the 10-year yield dropped 13 basis points to 1.71%. It is a 28 basis point drop in just 2 days. Yesterday was big. The 2-year yield also dropped by 13 basis points to 1.3%, and that has dropped by 27 basis points in just the past 2 sessions. Now, they're dropping so fast on the belief that the Fed will be less hawkish than previously feared because of the geopolitical risks to the economy. All right. Here's where we stand year to date. The Dow Jones is down 8.4%. The S&P 500 is down 9.7%. The Russell 2000 10.6%. The Nasdaq down 13.5% year to date. So the Russell 2000 and Nasdaq are still in correction territory. Now, that doesn't mean that the Dow and the S&P aren't close themselves. They only need to get to 10%, and the S&P has been there. If we look at the chart today, this is the S&P 500, okay? Today, it dipped back below the wick of the candle. It dipped back below into our box here, below our mark right here at 2300. And it got as low as 42. What is that? I can't read it. 42.79. Excuse me. That the line was in the way. I couldn't quite see it. 42.79 was its low today. So that wick got just in there, and then we pulled off those session lows to try to close a little bit higher, but not much, right? We're still down there pretty low, just 6 points above the 4,300 line. Now, I think tomorrow is going to be another bad day, another red day in the market. So, not financial advice, but I would be hedging and, take advantage of the uncertainty in the market right now. And the big uncertainty in the market right now is, what is this 40-mile long Russia troop transport vehicle tank? What is this 40-mile long convoy gonna do when they reach their target? That's the big uncertainty. Is Putin gonna surround the city and block it off? No one in, no one out? Or are they gonna go charging right for the center and try to take out the political leaders? That's the big uncertainty. What are all of these vehicles heading towards Ukraine from Russia right now going to do when they get there? And I believe that's why the market was down so much today. Because you look at gold, and gold was up quite a bit today. I believe almost 2%. Bitcoin was up today. And if we look at that BTC USD on TradingView, and there is a link in the description for a free account. Bitcoin is up 2.1%, but if you look at it over the past 24 hours, we got 2.6% over here. All right, so Bitcoin's up off of a big day yesterday, over 14.5% the last day of February. So Bitcoin right now is really being seen as a good store of value in uncertain times. The correlation to tech stocks and Bitcoin has been broken. No longer is there a correlation between the two, because tech is going down right now, Bitcoin is going up, right? With Ukraine taking donations in Bitcoin, with the fears that Russia is using Bitcoin to subvert the sanctions, Bitcoin is rising, just like gold. If we look, gold was up 1.93% today, so almost 2%. Bitcoin up 2.5%. All right. Both of those rising together. That is a good look, and that is a good feel for Bitcoin. People are seeing that even in times of uncertainty, Bitcoin is still working. And, that's the whole belief behind Bitcoin, frankly. A store of value, something that you can use when you've got nothing left to use. And it's holding up just like gold is right now. So this is a really good look. If you look at Ethereum, ETH USD with the smart contracts on Ethereum, it's just as powerful in times of uncertainty and crisis. It's up 1.5% today. It wants to get back above that 3,000 mark. It really does. It did at least tag that 3,000 mark earlier today. It got as high as 3,040 earlier today. But it came off a great day yesterday too, up 11.6%. So both Bitcoin and Ethereum are totally, we're seeing the utility of these coins in times of uncertainty like we're in right now. And that bodes really well for the future of both cryptocurrencies. Okay, let's go ahead and talk about SOFI. SOFI is the ticker symbol for SOFI. Um, wow, wow, right? Up 20% in the after hours. SOFI is up 20% in the after hours. Can that hold, right? Probably not as much as I want it to, right? I'm invested in SoFi. I own shares of the company and I want to see it do really well. But we also have to take into account the macroeconomics, right? Okay, so SoFi closed down 2% today. And of course, it reported in the after hours. So after the markets closed, it reported up 20%, right? It's up to 1342, which would take it to just about here, just about to where it's been. There has been resistance. If we go back to the middle of February, February 10th, rolling across to February 17th, even before that, February 1st and January 24, 26, there's an area of resistance building right here about the $13.50 mark, right? So it's up 20% right now, $13.45. 13.50, there's a real hard resistance level there that has held up now for over a month, okay? So 1350, it's a really tough resistance line to break through. If we look at the RSI right now, it's up to a 43.5. Now, something interesting to note here is that 50 points on the RSI, and it's at 43.5. 50 points, that's the highest it's been in over a month, 50 points on the RSI. And it gets to that 50-point level and it hits resistance at $13.50 a share. So the RSI is telling us we've got a strong resistance line building. Price action is telling us we've got a strong resistance line there. And also, the money flow index is a third indicator that we have got a strong resistance line at $13.50. Because if we look going back over a month here, the highest it ever got was 60 points. And that high was set back on February the 1st. Back when price action wise, it really tried to break above, and it got to 13.55 and then fell. It couldn't hold up above that $13.50 level. So for SoFi right now, $13.50 is a hard line resistance area right now for the stock. All right. Up 20% in the after hours. That's great now. Here's why it's up 20%. Now, I haven't listened to the earnings call. And I have not been able to read the transcript of that earnings call yet. So this is just preliminary stuff. Q4 EPS came in at a loss of 15 cents a share. That beat by a penny. That's good. Revenue came in at $279.88 million. That's up 53.8% year over year, which beat by $410,000. That's good. SoFi also had a record 523,000 quarterly new member adds, and that was up 39% quarter over quarter, bringing the total member count to 3.5 million. 3.5 million. At a year ago, okay, and a quarterly 906,000. This is a record, 906,000 quarterly new product ads. So remember here, you have member ads, which is very important. That's each member being added to a SoFi service, right? And then you have all the different products SoFi has, from loaning, student loans, car loans, and investing, banking, all the different products that SoFi offers. Now, it's very important that we see, number one, the member ads. We saw that. Number two, we want to see product ads as well. But here's the kicker. We want to see product ads growing faster than member ads. Okay? Because if product ads are growing faster than member ads, that means for each one member that's joining, they are using multiple services. Like maybe they use SoFi and get a student loan, or maybe they use SoFi for credit card, or maybe they use SoFi for invest, but they're using multiple products. So with this new record of 906,000 quarterly new product ads, that was up 51% quarter over quarter. All right. That was up 51%. That is great. That is really great. That shows us that product growth is growing faster than member growth. So that means for every one member, I know I'm repeating myself, but I just want to make sure it's clear. SoFi is growing. Every one member is using multiple SoFi products and services. That is excellent. That's exactly what we want to see for SOFI to keep up its growth. All right, so both of those, really big deal for SOFI. SOFI also, now there is one bad thing I'm going to get to, but all the good stuff first. SOFI also upped its full year guidance. All right. Now, SOFI said that it expects fiscal year 22 revenue to increase 55% to $1.57 billion. Okay. Now, here's the one problem. And it's not really, and this problem isn't it's not a SOFI problem particularly, okay? It's not exactly something that SOFI did that is causing this. SOFI, over its next quarter, the quarter that we're in right now, Q1 for SOFI, they downgraded it and they gave downside guidance. And they expect Q1 revenues of $280 to $285 million. Now, the estimate was $303.6 million. SOFI said part of the reason for the Q1 guidance being lowered is because it includes a $30 to $35 million negative impact to revenue from the extension of the federal student loan payment moratorium. So that's one of the reasons why SOFI has lowered its guidance for Q1, but it did raise its guidance for the full year. All right. So one little blemish there that I can see from the top line numbers. Everything else looks stellar. Hey, how's it going? I just joined. Awesome. Great to see that. Will you please talk about your thoughts about Russia-based stocks, banks, and oil companies? Sure, we can do that. They're taking a big hit, and they're going to continue to take a big hit. And sanctions aren't just something that's going to play a role in Russia, okay? I talked about this briefly at the beginning of the live show. For banks in Russia, all right, there could be a run on the banks. With the currency dropping like it has, people aren't going to want to hold the ruble. They're not going to want to hold on to that currency. They're going to want to exchange that currency for something more stable. Maybe crypto. That's a possibility. That's not as steady as something else like maybe the US dollar, if they could even get that. But that's a possibility. The banks are going to be put under immense stress. You know, here in the United States, our banks go through stress tests, all right? And those stress tests, they show whether our banks are in good shape or not. And it shows, and the main point is to find the weaknesses. All right. And once we find those weaknesses, then we can correct them. The Russia banks are going to feel so much stress over everything that's happening, over all the sanctions, that they could start to fail. And if they start to fail, that means they don't have enough money in their accounts to stay liquid. And that means citizens could lose their money. Flat out, gone, disappeared. Now, as far as banks go here, whenever sanctions are put on another country, like the US is putting sanctions on Russia, it doesn't necessarily hurt the leaders of the country. Like right now, Putin could be getting hurt, but he's not being hurt as bad as the everyday citizen in Russia. Now, our banks today lost a lot. A lot of banks were down over 3% today, US banks. And that's because of the sanctions put on Russia. It's a double-edged sword, and you have to be careful with that. Now, our banks went down today quite a bit because rates have gone down. And this brings up a problem that the Federal Reserve is going to have here in America. We have high inflation and we have a weaker economy. A weaker economy. So if the Fed comes out and starts to raise rates, and if they do it too quickly or they do too many back to back, that could cause an economic issue. And the economy could take a very solid hit. So the Fed right now is getting itself into trouble because typically when you have a weakening economy, you want to lower rates and make it easier for money to be lent out, borrowed. But we're already near zero when it comes to rates. So the only thing that the Fed can do is to raise rates. And that just makes a weak economy weaker. So the Fed is in a very tough spot right now with high inflation and, of course, a weakening economy. Now, we know it's coming. We know the economy is getting weaker because of all the earnings reports that just came out. So many companies are talking about the second half of 2022 being lighter on revenue or not seeing supply chain issues getting any better. Not until 2023, maybe. So, all of these issues, like I said at the very beginning of this video, it's almost like we are coming together with this perfect economic storm, and we're just adding fuel to that fire with the crisis in Ukraine and what Russia is doing, and then what the United States is doing in return. All of this is just spelling bad news for the economy, and it's going to hurt a lot of people. And it's not the big politicians that are going to get hurt. It's the everyday American, the everyday Russian, especially the everyday Ukrainian. But it's the everyday citizen of the country that will be hurt the most because of the actions being taken right now by governments. Now, your other question about oil, we could see 120, we could see $130 a barrel. No joke. We could see that. If we go look at oil here, if we pull up oil, and I want to get the right one here, all the way down at the bottom. Here we go. If we just look at crude oil here for a moment. Right now, crude oil is sitting at $104 a barrel. Now, this is a daily chart, all right? So if we back this chart up, remember this blue line here at the top of the screen, that's about $100 a barrel. All right. So here we go. we're back here now to April and May of 2014, and oil is $108 a barrel. Okay, uh, $107 a barrel, but it's over our blue line of $100 a barrel. We go back to September of 2013, and we've got oil at $109 a barrel, $111 per barrel. Okay, go back a little bit further here, and we've got right here March of 2012. We've got $108 a barrel, $109 a barrel. We go back to April 2011, $115 a barrel. And then we've got this big spike here. It was a real quick, big spike and a big drop off in oil prices. And this would have been in July of 2008. And we're at $133 a barrel. So it's not like in our history we have to go back really far to see high oil prices. In 2008, and that was during a financial crisis, we saw oil go over $130 a barrel. We could see that really soon. So that's just an example there. $147 a barrel. So this was over $145 a barrel in July of 2008. All right. So we don't have to go too far back in history to see oil that high. And you can see we're on a march right now. We could go parabolic here and hit $120, $130 per barrel. Here's where we are right now. We've been on a march, then we accelerated that march, and then yesterday it just skyrocketed up over 10% in one day. It's just incredible. So I could totally see oil companies going up. Chevron, ExxonMobil doing really well because of the oil prices going up. Unfortunately, though, there is a concern that demand may start to slow down. Okay. And it's not the demand of, we need fuel to heat our home, so it doesn't matter what, uh, whether it's $105 a barrel or $55 a barrel. But where the demand could be cut back on is how much you're driving your vehicle. Maybe you don't take a road trip during your next holiday event or what have you. Maybe you don't go visit your parents over the summertime or something. You just don't take those trips. So that's one area where you could see demand slowing down. Same thing could happen with airlines. Maybe because gas prices, oil prices are so high, then your ticket costs to just fly, cross country goes up, and then you're deciding, well, it's just too much to fly across the country right now, so I'm just, we'll find something local to do instead of going cross country on airplanes. So that could hurt airliners as well, and of course the stocks they're with it. So there's a lot of things right now that can go wrong in our economy, and we're getting to a perfect storm that could literally take away decades of hard work and just wipe it out. It's a possibility. So I hope I answered your questions there, about what's going on. Banks and oil, we dove into that. So hopefully that answered your question. If not, feel free to ask away, get more specific if you want to, and we can dive into different things together there. All right. So until then, thank you very much for the question. I'm going to do my deep dive on Zoom video because, like I said in the Catalyst Watch video, management would need to come out and say something absolutely special that would totally ignite this massive downtrend that Zoom has been in. And you see this downtrend. There's so many different times where it tried to, get a little spark going and get a little rally going, but it just wasn't happening for Zoom because the demand has just vanished. And if you look here at the chart, last earnings, Zoom had a big gap down here from their report, a big gap down. They lost 14.7%. And then today, 7.4%. It's like, all right, how much lower can this really go? And at least on earnings wise, on the top and bottom number, they at least beat, right? Well, they beat last quarter too, but it's the guidance that's most important for a company like Zoom. So, with each passing quarter, as we've seen with that downtrend for Zoom, Zoom just becomes a little further removed from the heydays of the pandemic fueled period. And that would be from the first half of 2021 through 2022. Now, last night with its earnings, that growing distance was on full display when Zoom reported Q4 22 results and issued downside EPS and revenue guidance for not just next quarter, Q1, but also for the entire fiscal year 23. So while its EPS comfortably exceeded expectations, revenue was essentially in line with estimates. And I mean, look at this here. They had $1.29 EPS is what they reported. Estimate was $1.07. So they beat by 20%. But revenue, they reported 1.071 billion and they had estimated 1.054 billion. So that was a 1.6% beat. So basically just in line with estimates. And it increased Zoom over this quarter. It increased at its slowest pace on record at 21% year over year. Now, to be fair, Zoom lapped an incredibly strong quarter in which revenues soared. You remember this? A year ago by 369%. Still, there's no denying that a return to pre-pandemic behavior and, of course, the easing of COVID-related restrictions are significantly diminishing demand for Zoom's video conferencing platform. This slowdown has been anticipated for quite some time now as we watch quarter over quarter and Zoom just falling because of that. gapping down on the charts, as reflected by the 70% nosedive that the stock has been on since last July. During this, and I can't say it any nicer, but during this brutal stretch, investors have looked for signs that a new growth catalyst would emerge to offset the weakness in small and medium sized businesses and individual video conferencing users. There were some promising possibilities, they do exist, like the Zoom phone, which it's not exactly what you think. It's not, you don't really hold it. But Zoom phone, it added 550,000 paid seats in Q4. That's better than nothing. And its recently launched call center offering, that's doing okay. But any hope that those two products would quickly turn Zoom's fortunes around were dashed by a fiscal year 23 outlook that calls for revenue growth to slow down to 11% from 55% in fiscal year 22. That is even uh, a bigger downturn than what's already occurred. Now, the main problem seems to be that earlier stage offerings, they're not contributing enough revenue yet to mitigate any video conferencing deceleration that's gaining steam. In Q4, Zoom's smaller customer base, those with 10 or more employees, declined to 509,800 from 512,100 last quarter. It's not all bad news, though. And here's a few of those not so bad news points. Zoom is adding and retaining larger enterprise customers at stronger rates. At the end of the quarter, the company had 2,725 customers, contributing more than $100,000 in trailing 12-month revenue, up 66% year over year and 9% quarter over quarter. Even better, the trailing 12-month net dollar expansion rate for enterprise customers was 130%. This customer category is where Zoom's strategy to expand functionality like Zoom Phone, Zoom Video Entertainment Center is actually paying off. During the earnings call, Zoom CFO said that much of the growth in Zoom Phone paid seats came from large customers. For instance, she noted that the number of customers with over 10,000 paid seats grew by 122% year over year. The solid performance in the large customer group alleviates some of the concern that Zoom's market share is in a free fall, while it competes against tech giants like Microsoft, Cisco, Google, and even Meta platforms. So, in an act of confidence, Zoom also announced a sizable $1 billion share repurchase program to reward any investors still hanging on. This this shareholder-friendly action is taking some of the sting out of Zoom's soft guidance. But overall, the story essentially remains the same for Zoom. With its booming days now behind it, the company is seeking that next chapter in hopes to rekindle its growth. So far, that spark has been elusive. But the rapid growth of Zoom Phone, that does provide some hope. Also, Zoom will be lapping much easier year-over-year comparisons starting in Q2. A turnaround in the stock, well, that's just not likely to take place anytime soon, given the magnitude of Zoom's downfall. Well, that's what I think about Zoom right now in their earnings report. But I want to hear from you. What do you think about Zoom's earnings? And number two, what do you think its chances of finding a catalyst or two to rekindle its growth? Do you think it's possible? All right. Let me know in the comments below what you think about Zoom. All right, I'll go ahead and wrap up today's live stream. I want to thank you so very much for being here with me. And if you found this video to be helpful, informative, actionable, then click the like button. That lets YouTube know that we did a good job. And take the URL and share it wherever you can. That lets others know that you think there was good information here. And then what really helps us to meet our financial freedom for everyone goals is for us to continue to be able to do this. And a like and a share is greatly appreciated. And then if you want to go one step further, click that join button right here on YouTube. And there's some perks there that can really help you out. We've got our top 10 stocks list and growth, value, dividend, momentum, 40 high quality stocks there, constantly updated. As a matter of fact, we went through over the weekend and finished them up yesterday, and we have updated our growth stocks, our top 10 growth, our top 10 value, and our top 10 dividend stocks. They are all uploaded and they're all there in our community tab for members as of yesterday. They're live, they're up there. And of course, we have Momentum one coming out for you. So make sure to do that. All right, ladies and gentlemen, thank you so very much for watching, and I'll see you in the next video.